Don't lose money in this bear market. Swing trade bear flag patterns with the best trading analysis indicators. Step 1. Get a trend indicator to show if the SPY is bullish or bearish. In this case, it's bearish. Step 2. Using the bear flag indicator, this is a quick process. Identifying the first leg as an impulse wave, the ABCD retracement, enter at resistance, take profits at support, then repeat this process over and over. Step 3, confirmation. Using the bear flag indicator will show you horizontal points of resistance, along with diagonal resistance. This bear flag is going to be a great trade. Step 4, trade analysis. Here's a couple things to consider. Price might move up into this $420 level on SPY, which this diagonal line confirms that. So you could wait to short this trade until price moves up a little bit higher, or follow the support level of the candlestick and wait for price action to break below to enter into the trade. Or you could use a diagonal trend line, same process, waiting for price action to break below before entering into the trade. Some even like a retest process before entering into the trade. Kind of like you have here, price action came up, came back down, and then retested before falling off back to support. For profit target, use 375 for the first target, 365 for the second target, and 320 for the third target. Step 5, managing your option profits. The first part of making option profits is using an implied volatility indicator showing you that option premiums are low. This is when you should buy options. The indicator should also be able to tell you when option values are high so that you'll know to sell them to make your profit. In each one of these cases, the implied volatility was relatively low. Buying naked puts was the better option. As the stock sold off, implied volatility went up, making you lots and lots of money. And that's what you should expect with this trade setup. Price come down, implied volatility going up. So what else can you learn from a good implied volatility indicator? Old resistance becomes new support. Welcome to Stock Charts Trading. This week's indicator alerts obviously is on bear flag swing trades. The best tips and tricks for a bear market. If you're a monthly member, I'd just like to say thank you. Now let's dive a little bit deeper into this 5-step process. Stock trend indicator is my favorite indicator because it quickly determines the trend. In this case, it's downtrend, so down trades. Because using the S&P 500 and the Dow Jones Industrial gives you a fair, broad market of what all the stocks are doing. This indicator will also tell you where you are on the bear flag process. In this, you can see that we're right up against resistance, so a great place to enter into a trade. Seeing that the Dow Jones Industrial is making a counter trend bear flag up into resistance, lets me know the next step of this process is a hard sell-off. Why won't price action keep on increasing upward? Well, just as we saw in this area back here, where price action went back and forth before turning lower, you would have to have the same thing where this price comes back down to support before coming back up into resistance or even breaking higher and reversing the trend. That's what gives me confidence when the stock trend indicator is pointing down, there's going to be more down trades. Step 2, bear flag pattern. In this chart, you'll see 3 different W patterns. As you can see, these 2 bear flags have a small impulse wave, compared to this one was much bigger in nature. We can see that the ABCD price action came all the way up into that resistance before coming back down to support. So if you see a rectangular W pattern, it's a good idea to draw a horizontal line across to find where that price action will come up to before falling back off. If you see a bear flag with a smaller impulse wave on the W pattern, you'll typically find price action gaps. I like to use these gaps as my support and resistance lines. Commonly, these gaps are confirmed with other support and resistance areas, which are great diagonal trend lines to enter into a trade lower. Another thing I commonly see on bear flags is a gap of exhaustion right at the resistance point. If we zoom in, we see a gap, then a sell-off, gap, then a sell-off, retest gap with a sell-off. This is a big help, but not an absolute. But zooming in, looking at this support and resistance, you can see the price action could go a little bit higher, possibly having a gap up into this resistance trend line before selling off. Hopefully this is the case for you on Monday. You can use this bigger trend line as your resistance area to enter into the trade. You could use a tighter resistance line to show you where to enter into the trade, or break a support level, where to enter into the trade, or even a horizontal level, where to enter into the trade. All of this is based on your comfort level. Now for swing trading. One thing you need to consider with swing trading is the difference in price action with the trend versus counter trend are drastically different in size, although it takes about the same amount of time. Each one of these bullish moves was 50 days. Each one of these bearish moves was 50 days. So in consideration, you should assume the next move lower will be at least 50 days long. Understanding the length of the swing trade move based on the time frame that you're going to be using, I like to use 1 year, 1 day, is going to help you with the trade analysis of where to enter, where to take profits, and potentially let your runners run. Now for trading analysis. Even though the bear flag pattern alerted you to this trade setup and it was successful, came back down to support, this pattern would probably be more likely classified as a double top. Price will come back down to support level and then bounce a little bit higher. Commonly, bear flag patterns have an impulse leg lower, creating the bear flag, counter trend higher, then a duplication of the flagpole, making you a lot of money. But don't despise support levels of the bear flag. This is a great place to take some money off the table. Notice how high price action came off of this support level? Yes, before going lower, but then came up 2 more times. If you were waiting for price action to come all the way down to this support level, because of the flagpole duplication target, understand these move upwards could be pretty emotional. And these are some of the things you should consider for your trading system. If you don't like waiting a long time, winning and losing, having your option value go back and forth, then take a smaller profit target back at support. I think 305 would be a great profit target on DIA. And you'd have to evaluate how much more money you'd make if it really went down to $300 versus 305. Some things to consider. Is the extra profit worth this $5 move? Another thing to consider is, yes, this is a high probability because you have intersection of 2 resistance levels for price action to come up into this resistance and then sell back off the 305. But what if price action broke through both of those levels using this higher resistance level before selling off? That means the percentage of move would have to be much greater and the time of your option expiration. One way I like to solve this is, when I'm considering step 5, managing my option profits, I think about what trading strategies we have at our disposal. Yes, with low implied volatility, I can use a naked put, but in case price action goes against me, I think a bear put spread would be better. A bear put spread is great because if I come into this 135 resistance and enter into a bear put spread, looking at your option chains, click on verticals, looking at the Dow Jones, currently $326, going out about 50 days to mid-September, and we'll look at mid-October. The current at the money spread trade has about 110% return. Max risk on this trade is $2,380. Max profit on this trade is $2,620. But here's the kicker. Price action only needs to stay under $327.62 by the expiration of September 16th. Notice that the vertical trade setup is green, which also matches with the implied volatility indicator. When the implied volatility is green, that means you buy green option strategies. When the implied volatility is red, that means you sell option strategies. As price action goes lower, your implied volatility will come up into this red area, which means sell. Take your profits. Now, to get an understanding of this trade setup, this is September 16th, when the option will expire. Here is the $327.62 mark the price action has to stay under to gain $2,600. That means price could come all the way up to this upper level, come back, retest, and still close below this level, making you 110% profit. But obviously I wouldn't tell you to take this bear flag if I thought price action was going to go that high up, because this trend indicator channel is very powerful. Not to mention the implied volatility. Old resistance makes new support. All of the signals are price action is going to start coming lower as implied volatility starts raising up. So in closing, you could use this as a support level to take profits. You could use this as a support level to take profits. You could use the flagpole duplication as a lower price to take profits, or you could use a bear put vertical spread. Obviously, you'd make the most amount of money if it went all the way down to this lower level, but that's the least in probability. You have a better probability that price action would come down to this $300 level. You have an even greater probability that price action would come down to this $305 level. And you have the highest probability level that price action will stay below this $327 by the expiration of September, making you over 100% profit. Now, you don't have to do one or the other option strategy. You can do a variation. Whatever meets your system, your strategy of making money and profit is what I want you to accomplish. Sometimes challenging our mindset of what we're doing and how we're doing it is good for us so we can properly tweak our system to make it even better. For this week's trade setups, obviously use the SPY or the Dow Jones Industrial. Next week, we'll go through lots of different stocks using this same approach to see where we are on the swing trading process of a bear market using bear flags. If there's any indicators that you saw that make total sense that would match your trading system that you need, go to stockchartstrading.com. You'll get all the information on how to make those indicators your own. As always, I wish you the best in trading.